welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. Well, it's Friday the 13th. Now, usually this combination is always looked at with a lot of fear it will turn out to be a great one for the markets or not. But in the case of markets, it's actually done well in the past. There have been too many cases where there has been an issue with this one. But let's continue to look at what are the key details that you should be looking at in terms of the trade setup for today. Well, this snooze fest of a week finally comes to an end on Friday. While there has been plenty and more activity in the stock-specific action within the broader markets, the Nifty almost feels like it's not moved an inch since last Thursday when it actually attempted to scale the 25,000 mark on the upside. But it is still stuck in this 300-point range between 24,500 and 24,800. Although yesterday it did, close at a lower end and therefore logged its fifth day of losses for the Nifty. After 14 days of gains, even the mid and the small cap indices saw profit booking, ending the session lower as well. But more important data flowed in after the markets closed yesterday, and that was to the tune of the inflation data. The CPI inflation for the month come in line with the expectations, but now it remains to be seen that whether today we will be seeing some positive on reflection on that data. So what we've seen is that the CPI inflation has come in at 5.48% for November, which marked a sharp drop from October's 14-month high of a CPI inflation that we had seen of 6.2%. That was driven by lower or slowdown in the food prices and favorable high base effect as well. Now, looking at this, we will have to see whether the RBI will look at it as a favorable key point to cut rates, because now inflation has slipped below the RBI's tolerance band as well. But the industrial production also showed signs of revival. That was also good news. IIP posted a growth of 3.5% in October, edging up from September's 3.1%. So two macro data which are positive as a trade setup today. The markets will also react to announcements that have actually come in from China post-market hours, and the reaction from the Wall Street post the rise in the jobless claims and slightly hotter than expected producer price in the US. Now, what we will do is that for the week, we know that November Nifty is marginally lower, and it needs to now close above 24,677 if it has to manage a weekly positive gain today. We'll have to see whether that happens. The third most important data that you should watch out for is the FII flows. Foreign institutions have resumed their selling spree. Over the last few trading sessions of gains that we had seen and buying coming in from FIIs, again, last 2-3 days have been sell-offs. And especially the tune of sell-off that we have seen yesterday is something that you cannot ignore. 3,560 odd crore rupees of FII selling has come in as of yesterday. The DIS bought, however, 2,646 odd crore rupees of stocks in India's market yesterday. Now, what are the cues from the Wall Street telling you? Wall Street, all the three major indices closed lower overnight. Dow Jones about 0.5% lower, marking its sixth consecutive losing session. Nasdaq shed about 0.6% in trade, slipping below 20,000 mark, while the S&P 500 declined about 0.5% as well. The Asia-Pacific markets also have declined this morning on Friday, echoing Wall Street's losses and hotter than expected US producers' price inflation report. Now, Nikkei dropped by 0.7%, Topix fell by 0.7%, Kospi declined by 0.3%, and the ASX 200 was also down by 0.6% as well. Similarly, what are the trends that are coming in? The GIFT Nifty is indicative of a muted start for the Indian markets as well in trade today. What else do you need to look at? Gold has slipped about 1% in trade. Investors have booked profit after the brief climb of 5-week high that we had seen earlier in the session. Now on Friday, however, spot gold has edged up just marginally, 0.2% higher at $2,686 an ounce. We'll keep an eye out on that. Brent crude, however, has dropped by just 11 cents at $73.4 a barrel. So we'll keep an eye out on that. Now, which are the key stocks that you could also definitely look at and keep on your radar? Reliance Industries. Now, Russia's state-owned oil firm Rosneft has agreed to supply up to 500,000 barrels per day of crude oil to Indian upstream oil and gas major Reliance Industries in the largest ever energy deal between the two countries. And this could be seen as positive. This news is coming in from media reports and some of the wire reports as well. Apart from this, what else can you really look at in today's trading session? Well, a whole host of important data that you should look at from HDFC Bank. The private sector lender has received an admin warning from SEBI The December 9 letter has highlighted alleged non-compliance with certain provisions of regulations governing merchant bankers. So you can keep an eye out on that too. Zomato will be in focus. There's the GST department in Thane that has imposed a tax amount of 800 odd crore rupees on Zomato, including interest and penalty. We'll look at that as to how Zomato reacts to that one. We also will keep an eye out on Titan. The Titan's luxury brand, Zoya, is now eyeing 20 more stores in the next 3 to 4 years, as the CEO has highlighted. We'll keep an eye out on that one. Apart from this, Tata Motors is something that you can look at. The commercial vehicle manufacturer has announced a entire range of trucks and buses now, and this increase will take effect from January 1st of 2025. This could augur well for realizations and for the margins as well. So we'll keep an eye out on that too. Apart from this, we will also look at a whole host of other stocks like LBCC. The company has been appointed as a project management consultant to complete Supertech's 16 real estate projects at a cost of nearly 9,500 crores, a move that will provide relief to thousands of home buyers who've been waiting for far too long to get possession of their homes. And for NBCC also, it augurs well. So good news coming in for that one. Ashok Leyland will be in focus. The company has bagged an order worth 345 odd crore rupees for supplying 1475 BS6 diesel fuel type passenger bus. Tamil Nadu State Transport Corporation that even Ashok Leyland will be looking at. Apart from this, we will also look at State Bank of India, the public sector lender, is now seeking a $197 million facility, according to reports, adding record volume of yen loans raised by borrowers in the Asian markets, excluding to be in focus. Apart from this, we'll also look at Nesco. Now, a diversified firm has indicated that it has been declared as the highest bidder by National Highways Logistics Management for the development, operation, and maintenance of wayside amenities alongside the Hyderabad-Visakhapatnam Expressway and in the Khammam Devarpalli section. So that is something that we will be looking at. Apart from this, you can also look at the International Gemological Institute India IPO that will be opening up. In the primary market also, there's a lot of action. Brokerage houses, where are they keeping a radar on? Well, on EPAC durables first. DAM Capital limited its coverage with a buy rating on this one. They believe India's RAC market is poised to grow at 14% CAGR between FY25 to FY30 estimated. They believe EPAC is well positioned for the growth with its strong R&D capabilities, deep client relations, and increasing wallet share as well. From the oil and gas space, Jefferies is keeping a keen eye out on IOC. It's upgraded the stock to buy with a target price of 185. Here, they believe the refining is set to strengthen in calendar year 2025 on accelerated capacity closures amidst the healthy demand. Now, company has most leveraged to a refining margin improvement owing to its highest refining and marketing ratio, and the risk reward has also turned favorable as per Jefferies. Now, on the pharma space, Goldman Sachs has come out with a report as well. They've analyzed the export data of the key CRDMO companies for November 2024. They believe there are some mixed trends that are to be considered across the board. 6% year on year. Piramal, there's a 31% growth. Blue Jet Health is a 61% growth right there. Divi's, there is a 5% growth. And Gland Pharma, there's a 3% growth. But they continue to prefer two stocks within this space, Syngene and Newland, as per the CDMO companies are concerned. From the IT pack, you can keep an eye out on Infosys today. Citi has come out with a neutral rating with a target price of 1965. There are some of the management made key takeaways that they have highlighted. One, demand outlook, and two, IT budgets. Now, they believe the company is witnessing an improvement in the discretionary spend in the pockets that they are operating in. And secondly, new deals are also driven by compliance and digital transformation right there. Now, from the banking space, you can keep an eye out on UBS coming out with a report, and I will just share which are the banks that are on their top radar. On IndusInd Bank, they have a neutral rating. They have cut the target price to 1150 from 1350 earlier. Estimates for FY25 and FY26 here. On Axis Bank, they have a neutral rating. And on AU Small Finance Bank, they have a neutral rating again. Here, the target price has been cut to 640 rupees. However, from the banking space, they prefer HDFC Bank, ICICI, and Federal Bank are their top picks right there. All right, viewers, we are now joined by a very special person on board. We have Mr. Mayuresh Joshi, Head and Equity Research of William O'Neill India. Warm welcome to you, Mayuresh. So good to have you with us on this special edition. I first wanted to get a sense of, nothing much has changed between the last time that we spoke last Thursday and today. Again, it's Friday the 13th. Tell us, how have you analyzed this extremely small range-bound trade in the markets that has played out, and what is it that you expect from the markets going forward from here? Do you think these macro triggers of inflation coming in line, IIP improving, will provide solace to the markets in the current realm?
Morning, Sakshi. No, again, I think the markets will go through the grind as December plays out. Typically, I think it should be a little bit more easy as the holiday season begins. But as we head into Jan, I think two, three important factors that will play out. One, obviously, I think how earnings are expected to play out for Q3. Looking at how earnings have been for Q2, a large part of expectations related to earnings seem to be very, very soft. And therefore, I think earnings season is going to be very critical and crucial. Second, I think in terms of the government capex, what we've probably seen in the first half for a platitude of issues, monsoons, elections, etc. I think the second half the government spending should come back with a bang. And therefore, I think as government spending accelerates, a few key sectors, including infra, manufacturing, capital goods, defense, should see incremental order wins starting to flow through. Housing, infrastructure, manufacturing, ports, roads should come back in focus as far as government spending is concerned. Third, I think as we head into Jan, we'll also be talking about how the budgetary trends will play out because the budget is expected on the 1st of Feb. And therefore, what kind of expectations does the market have from the budgets is something to be watched out for. And let's not forget, I think geopolitics, Trump assumes office on Jan 20th. How the inflationary data points are expected to play out. A broad part of the market expectation is that retail inflation should start coming out now, specifically food inflation, which makes case for a base case scenario in the Indian context for a rate cut that probably happens in February. So I think a lot of moving parts for the markets as we head into Jan. But December largely would be a range-bound trade. I think it will be more consolidated action that we'll see on.
Okay, got that. Mayuresh, we'll quickly look at the pre-open and come back to our discussion. The Nifty is indicative of, again, a muted start. 24,508 is what we are looking at, about a 40-point of a downtick that you can really expect, viewers. 0.1% of a loss on the Nifty, so that muted trend could continue. Let's look at some of the heavyweight counters from IT and the banking space. To really see whether there is any positive trend that we could be looking at. Let's look at the banks first, HDFC, ICICI. Let's look at these two counters to see how are they placed. Remember yesterday towards the closing of the session, some of the banks did pull up. HDFC Bank is indicative of a flat with a negative bias start, 1858. Let's also pull up some of the other stocks like ICICI Bank as well to see if there is any kind of a trend. So that's a mixed trend. You are seeing ICICI opening higher. Let's also pull up IndusInd Bank. That was the one that pulled up in trade yesterday. So let's see if that move has really continued within the banking sector on this front as well. Some half odd percent of a profit being taken off. Let's look at the IT space then. Infosys, TCS. Let's also look at Wipro, HCL Tech, and some of the mid-cap IT names that have been consistently in favor, like Coforge and Persistent, to see whether there is any kind of a continuation and move. Well, Infosys is down by about 1%. Wipro, however, indicative of flat with a positive start. Let's also look at HCL Tech, TCS. Coforge, however, again, flattish in trade at 9194 odd levels. So, it's a mixed trend right there at the beginning of the show as far as the IT space is concerned. Let's see some of the stocks then. Tata Motors, for instance, remember 2% of a price hike coming in across its board. That's also looking up in trade. We are looking at even Ashok Leyland that has been declared as one of the lowest bidders. So again, positive. JK Tyre is also looking at a positive momentum. At this taking some loan right start in trade today. Then there is a move as far as GNA Axles is concerned. There's a facility which it is commissioning as far as moves are concerned within its projects. For so solutions, there's going to be a partnering with Web ID Group, and therefore it's indicative of a positive start right there. But all in all, a mixed trend that is shaping up at this point. We'll come back to more moves as the markets settle down in the pre-open. But Mayuresh, like you pointed out, it's been consolidation and consolidation all the way. But several pockets that have been showing us some strength. I wanted to first bring in the small caps and the mid cap space. Record highs continuing for the small caps. Just few months ago we were talking about a lot of froth being generated here, a lot of caution that was also given in by the amphi on that front too. But just some kind of a time being taken care of, or is this again pointing out to some concern that investors must get cautious on the small caps yet again?
Also, I think two ways to put this, Sakshi. One, I
Mm-hmm.
think valuations for the broader markets or the broader universe is definitely at an all-time high level, elevated levels.
Yeah.
I think one needs to be a little bit more picky when it probably comes to the broader universe. You probably need to pick sectors and stocks within those sectors where earnings growth should continue for the next 2 to 3 years in a far more stable and a compounded manner, and where valuations are not too expensive. Now, there are very few pockets that are probably left out where valuations are probably not that expensive. And expectations of earnings growth should continue. So I think investors should probably be a little bit cautious when it comes to the broader universe. Because if there is some element of mismatch in terms of earnings delivery, that can turn out to be a little bit more disappointing. So my own sense is that when it comes to the broader universe, look at leading sectors and leading stocks within the sectors.
Right, absolutely. Let's talk about the theme that you were also pointing out in your initial comments, Mayuresh, pre-budget positioning. We're already seeing, investors lapping onto some railway stocks over the last few days, some infra-related names, cement sector names, metal names. They're coming back in flavor
Yeah.
yet again. Do you think you would advise investors to look at some of these pockets well ahead of time to take the benefit of what the budget announcements could be? We've always seen the budget announcements around infra garner a lot of interest from all the investors. What is it that you would be positive on ahead of the budget, and what would you advise there?
Allocate urban rural affordable housing, I think the allocation is going to be quite budgetary estimates are concerned. And therefore, I think cement as a subsector is something to obviously look at. Obviously, you've seen a lot of consolidation happening for the sector. You've been hearing of price hikes that have been initiated. And therefore,
Yes.
as cost remains stable, the expectation of both these factors with utilization levels going up for the industry as a whole will clearly mean operating leverage getting played out. Secondly, I think with a lot of captive power getting used, I think there is sufficient amount of savings as far as energy costs is concerned. So this is definitely one sector that you need to keep on your radar. And the second element, obviously, I think you are expecting a strong allocation happening towards infrastructure and manufacturing. So I think if you probably look at the budgetary allocations for railways, roads, port development, metro development has been quite significant. And there choose certain elements within these pockets itself. Allocations can be quite significant, and where a few of the leading companies can probably notch. I think a few stocks within these sectors can do well. Last but not the least, again, I think waste and water management is something that I've been extremely bullish upon over the last few quarters, and I still remain bullish over the next few years because this is one theme that will continue doing well, in my opinion. As we head towards 2030, you're seeing most companies put out their ESG guidance is coming in. Carbon emissions are expected to get cut down quite significantly. So I think this is one space along with power. So I think renewables along with waste and water management, I think this is one space where some idea and stock picking can actually be initiated.
Could you name some stocks then, Mayuresh, from this space?
So I think Tata Power as an example, right, within the leading power manufacturers, they've given amazing targets for 2030. It's 30,000 odd crores. And therefore, I think what you're probably looking at in terms of core numbers and the aspects of the, I think this is one you can probably look at. Again, stocks within the broader universe as far as waste management, water management are concerned. You've got stocks like Wellspun Enterprises, Wellspun Corp as an example. I think it's a
Yeah.
perfect in terms what they are doing in terms of both these elements put together. And therefore, as incremental orders start coming through with better margins and they execute well, I think earnings should see a reasonable amount of growth going forward.
Okay, got that. The other theme, Mahesh, that you really pointed out very well, that will be our next major trigger before the budget also comes in is Donald Trump's assuming office on January 20th. So how he's already started to indicate a trades, tariffs, get into the drill of listening to Donald Trump on an everyday basis or, watching his tweets almost on an everyday basis as well. How is it that you advise investors to really keep that sanity going and keep that long-term focus going and not get favored with any, aggressive statements coming in? You do not know what next is happening and knee-jerk reactions coming in. We have to be prepared for all that volatility. We've seen that in the past as well. So what is it that you're advising?
I think you're absolutely right. I think it's absolutely unpredictable, right? That we've seen in the
Yeah.
past. That suddenly a tweet comes off and the market starts reacting. So I think Donald Trump is creating his own version of Atmanirbhar USA, as I call it, where he's
Mm.
calling a lot of investments in the US. He's looking at tariffs, safeguarding of US businesses, so on and so forth. So I
Yes.
think it might be a trend going forward. And therefore, I think our own take at Markets with India has been focus on domestic cyclicals. Because the Indian domestic consumption story is going to remain extremely, extremely strong and robust. And
Okay.
therefore, within the domestic cyclicals, infrastructure, manufacturing, cement, waste, water management, EFSI, I think they should continue doing well. You can obviously have a hedge with some pharma stocks, but I think you have to be very, very selective because you never know
Yeah.
what went to as Trump tweets.
True. True. I will come to the export-oriented sectors in a bit, but then you did talk about BFSI. Tell me, which is the part of the BFSI segment that is appealing to you after the recent run-up has come in? I mean, what we have seen is with the wealth management space, the AMC stocks, broking stocks. Every day we see some of the other stock coming in at 52-week or an all-time high level right there. So a lot of action is already built in. At the same time, there are a lot of fund houses now launching ETFs specific to some capital markets related stocks. So there is a long term theme as well that is. That investors have to keep in mind, and of course over the next medium to short term as well. What is it that really appeals to you within BFSI? Are you looking at frontline banks? Are you looking at NBFC space? Are you looking at broking or a combination of all three?
I think selective. So I think within banks, I think BFSI, large banks, private sector banks, public sector banks generally have done well. But Federal Bank, Bank of Baroda, in my opinion, should continue having a good show. Valuations are quite reasonable for both of them, and earnings should remain strong. Within the NBFC universe, I think stocks like PNB Housing, where they are clearly embarking upon their emerging and affordable areas, I think they should see significant growth, and they've got a good grip in terms of how to manage the book without having asset deterioration. Again, valuations not too expensive and expectations of growth should start coming out very, very well as well. Again, the financialization of savings, I think this entire theme, rightly paid through AIM. Therefore, I think a large part of the AIMS universe is a little bit expensive, but if flows keep on coming in, and the expectation of what we've built in over the next few years, HDFC AIMS is something that we could.
Right. We look at the market opening now. First, Amurish, and then come back to the discussion on markets right there. 24,500 and 81,198. That's how the Nifty and the Sensex are opening, viewers. Let's also look at some of the other pockets that you can quickly look at in terms of the space. So advances are way lower than the declines. 607 advances to 1,016 declines. So the market favor is towards the negative side. The Nifty Bank is also indicative of a negative opening right in the beginning. 0.2% of a loss on the Nifty, about a 0.1% loss on the Nifty Bank. 53,174 is where the Nifty Bank is also opening at. Look at the key pockets then. Hindalco is opening lower. Infosys about 0.7% of a cut. Reliance Industries, half what percent decline, 1257. And the heavyweight counters right in the Nifty that are ticking in the first ticks right there. Let's also look at the IT space that's declining by 0.4%. Mid caps down by 0.2% as well. So you're looking at the heavyweight sectors as well as the broader markets, indicative of a negative start on that front too. Let's look at some of the other pockets then. Among the sectors, metals are down, IT, PSU banks, pharma, auto. You also have the FMCG space, financials. Most of the sectors are actually down in the red. What is up? Some of the stocks, DCM, sharp moves, 9.9% higher, 131. We'll keep an eye out on this one. HAL, 13,500 odd crore rupees of an order coming in, 1.7% higher. Swiggy, 515, 2.2% higher. IOC, India Green, with a positive brokerage call coming in. That's the kind of move that we are seeing on select stocks on that front. Okay, the market breadth is shifting now. Advances 808 on the NSE versus 1127 on the side right there. It's improving a little bit. Let's continue to look at some of the other stocks that we can spot for you. Metal losers. You have JSW Steel, Tata Steel, Hindalco, all on the declining side. FMCG space, there are some greens that are coming in on that front. You also have Sun Pharma, Asian Paints, some of the other stocks, Nestle from the farmers, from the FMCG space that's also buzzing in the positive zone. Nalco, remember, yesterday it had taken a beating. Today it's up by about 0.3% in the green. You also have several other stocks that are indicative of a negative start. IndusInd Bank, again, after yesterday's sharp up move, is declining, 0.5% lower. Bandhan Bank, Axis Bank, all declining in trade. But IOC, with that positive brokerage house report, is now up by about 1.5 odd percent that is coming in. Let's again look at some of the other pockets that are buzzing in the initial trading action. Real estate sector is looking at a positive start, about 0.1% higher in trade. Some of the stocks on that front, which are positive. The top five movers on the positive side on the Nifty. On the lower side, you have the metal counters, Hindalco, Tata Steel, JSW Steel, even Dr. Reddy's, Infosys, and Bajaj Finserv are the top five losers right there. Some stocks within the FMCG space, some stocks within the pharma space. So defensives really playing some kind of a part right there. India VIX is up by 1.8% on that front, but HL definitely on the positive zone right there. That's as far as the initial action is concerned. EPAC Durable, remember, 0.5% increase. This was on the top radar of brokerage houses as well. You have Bajaj projects, again, news flow led, 6.5% higher for this one as well. Some of the broader market movers, Zinka Logistics up by 4.2% higher in trade as well. That's the move that you're seeing. Again, tourism and hospitality space. Chalet Hotels is up by about 1%. So that's the kind of move that we are getting. Let's get back to Mayuresh to see what is he really looking at. Again, it's a muted start with large part of the markets on the negative side, consolidating like you pointed out yet again. Anything that catches your attention, Mayuresh, in the opening?
No, not really. I think we'll still focus to our ideations, our rationale, and our expectations going forward. So I think the markets will remain muted, Sakshi, whether we like it or not. I think, yeah, it's a boring fix, but I think September will play out the way it is.
Right. Adani Group, are you looking at that one, Mayuresh? Do you think that is something that investors now need to make up their mind as to how they have to approach this space? Are the ghosts of the past buried completely, or is there still some more developments that could hurt everyday movement right there on the Adani stocks?
So what actually developed from the injunction, from the indictment, sorry, what has probably taken place in the next few weeks or months, I think we'll come to know. But I think within the group, again, I think Adani ports are continue having a good show. I think they've mechanized most parts of their port operations. The acquisitions are now working in their favor as well. And therefore, I think the numbers as they play out, both in terms of container volumes, in terms of operating performance, and therefore, I think the expectations that get laid out over the next few years seem to be solid as base case scenario for Adani Ports. So I think within the group, I think Adani Ports is something that probably looks attractive from an earnings perspective going forward.
Okay, got that. We'll keep an eye out on Adani Ports right there. We'll also get you to talk about the defense space. We discussed railways. HAL is buzzing sharply higher in trade along with these pre-budget positions on railways. Do you think defense will also start to pick up pace?
Yeah, I think that's a move that will come through defense. You've already seen elements happening in railways.
Yeah.
The defense will also play a part in terms of their price moves as well. Allocations will come. They're sitting on heavy order books. I think they're executing reasonably well. The margins of these orders are reasonable. The cash conversion cycle has become far more predictable for these companies itself. And therefore, the bottom line growth along with return ratios should show improvement. I think with the order books that they carry, Sakshi, my own opinion is that they will have capacity expansions selectively across the spaces that they operate in. And as this happens over the next few years or next few quarters, obviously the incremental asset turns that probably takes place and asset sweating that takes place will ensure that 27, 28 revenues become far more robust and compound at a good pace. Valuation's expensive, but yes, I think this is one space, as I said, within the domestic cyclicals that can continue doing well. So yeah, I think stocks like HL can do well. Cochin, Mazgaon, shipbuilders can actually perform reasonably well as well, along with the others.
Okay, got that. So we'll keep an eye out on that too. Let's also welcome Dharmesh Kant on the show then. Dharmesh Kant is the head of equity research at Chola Securities, a regular on our shows as well. Warm welcome to you, Dharmesh ji. Good to have you with us. I was just beginning to talk with Mayuresh and I said that, when I was introducing the markets, I said it's Friday the 13th. This is going to be spooking much more what we have already seen in the last few days. What are you sensing about the markets?
Good morning, Sakshi. Good morning, Mayuresh, and good morning to all our viewers. See, Sakshi, whatever is, the ugly, the bad, and the not so good has already been priced into the market.
Okay.
As far as the data points are concerned, there is no positive trigger as of now. And that is why we are seeing some trading activity happening in the market with bouts of profit taking happening place. To my mind, Q3 is already through. People are talking about second half, but please not forget that of second half, one half is already through, and the data points which we are gathering from on-road data points are not so encouraging. Be it consumption, be it other sales are concerned, that's not happening. B2C sales on the consumption part is also getting a slowdown. Even the discounts which were there into due to festivities into the garment and clothing has not picked up that well. So I think all these are getting priced in, and the budget-related themes, like as you just discussed with Mayuresh about
Yeah.
defense, railway, infra, these things will remain the flavor. So one has to be very cautious and selective. Having said that, this market does give you a cherry picking and value buying opportunities, and the pockets which I think which is placed fairly well on the valuation matrices. So one is the public sector banking space. If the banks have to go up from here, it should be the public sector banking space which looks attractive. Some of the infra stocks along with cement, we have seen some price hike coming, and this is the time when the volume growth and everything will pick up. Our data point checks from the Eastern India, Central, including the West India, activities on the infra front is already picked up. So these are the sectors where one should be focusing on. Forget about the index part. Let the index do whatever it is doing. If you are focusing on the right companies, there are chances to make even trading monies. Investment is always on.
That's a wonderful point. Right? We let the index do what it has to. And we have been seeing that for the last 1 week, that the stock specific and sector specific action has continued. You did talk about favorable sectors that you're looking at, especially in the PSU banks. Where are you keeping a keen eye out on? Is it still the SBI, Bank of Barodas of the world? Are you going lower rung as well on that front?
No, Sakshi, we have gone roll down the run because if you look at the Bank Nifty index per se has made a high, but the breadth was very narrow. It was only HDFC Bank, ICICI Bank, and SBI which led the index higher. Otherwise, if you look at say Bank of India or Bank of Maharashtra or Canara Bank, PNB, they are almost 25 to 30% down from their highs. So has been the case with private sector banking space as well. So look at IndusInd Bank, Axis Bank, Kotak Bank. They are 10 to 15% lower from their previous all-time high. So this market was, whatever this pullback rally happened, was on a very narrow breath. That was IT stocks, few banking stocks, which pulled the Nifty up. Having said that, in the banking space, I think if you look at the Q2 earnings, they were excellent for the public sector banks. The flavor was, 50% of the earning growth came through the treasury income, both for private and public. But even after discounting that, public sector banks gave a PAT growth of around 18 to 19%. And with stable asset quality, stable NIMs, and with the maintenance of NI growth, I think going forward, whatever government-led infra opportunities are there, these are the banks which will get first mover advantage or the traction. And there, the pecking order is, Indian Bank, Bank of Maharashtra, Canara Bank, PNB. Looks pretty attractive. SBI we are avoiding for the time being. I don't think the delta will come. If the
Okay.
delta has to come, it will come from the second rank PSU banks.
Okay, got that. So that's a wonderful point that we'll keep an eye out on the second round PSU banks. We'll come back to conversation with you, sir. We'll get in Mayuresh back onto the chat. Mayuresh, we have to let you go, but before that, we have to start prepping for the year end, the New Year's, and then welcoming the New Year as well. What are the plans, for the year end, and how are you advising clients to restructure their portfolios for 2025?
Morning, Dharmesh, in the first place. Been a long time. So, no particular plans, actually. I think it's evolving like the markets, as I would call it. Secondly, I think if you've got a portfolio which is heavily laden towards
Yeah.
extremely overvalued sectors,
Mhm.
I think my own sense is that you should probably be relooking at that. And again, is be the thing to look out for in FY25. And you've got a whole areas to play around with as far as domestic cyclicals are concerned. Everybody's talking about an urban consumption slowdown. But again, I think if you
Yes.
look at the larger trends, the big picture over the next 5 years, consumption is one trend which will keep on doing well, whether it's discretionary or durables. So I think the India growth story continues. For the India growth story to continue, I think the Indian consumption story and the Indian domestic cyclical story will continue. So our theme for 25 is focus on domestics. I think they will do very well, let alone what the world probably does.
Brilliant. Okay, so Bikaji Foods was for 2024. What is the stock that you're going to talk about for 2025? Bikaji has given over 60% returns from the time that you mentioned to all our viewers, and they have made handsome money. Tell me for 2025, what is it going to be?
I think let's disclose that on the 1st of Jan for your viewers. Your New Year press release.
The cards close to his chest right there. Mayuresh is not revealing what he's buying into 2025, but we'll catch him around very, very soon. We'll not let him go without telling all those stocks to you, all you viewers. But many thanks, Mayuresh. Hope you have a fantastic time till the time we meet you next, which will be very soon next week. And we'll get around to discussing more themes and ideas for 2025. Good to speak to you, Mayuresh, as is always.
Thanks, Sakshi. Till we meet next time. Thanks.
Thank you so much. All right, Dharmesh ji, some points that even Mayuresh mentioned, he was talking about domestic cyclicals. You talked about, our own PSU bank story. But he also mentioned one important point that is on the urban consumption. That is something that we all know that has been a pain point. Even though inflationary figures are now indicative of some cool off, we'll have to see whether it sustains also or not. But margin pressures is something that the FMCG players have already begun to highlight. You know what could be coming in for the FMCG sector and the consumption sector right there. Tell me, how are you really looking at this space? Is it an avoid right now because managements are coming up front and already about margin pressures?
I think we have to look at it from a top-down approach and a bit of a macro approach. If you look at the corporate earnings for first 2 quarters, it was a washout. And now you look at urban consumption is primarily driven by the corporate earnings, either through the corporates or through the salaried employees. So what kind of a salary growth you are looking forward to for this new financial year for 26? It won't be more than 6 to 8% should be the average salary growth. And with inflation at 5%, 5.5%, you hardly have a real income of 1.5% in your hand. So with that thing in mind, I have my own doubts. Nobody is doubting the long-term structural story. Let's be very clear about that. In short term, say 3 months to 6 months, what is the outlook which is being painted? And to my mind, calendar year 25 would be a difficult year because I don't see per capita income rising for the universe India as a whole. So salary upgrades can be 6 to 8%. Corporate earnings we have seen faltering. So capex will, since demand won't be there, private capex will take a hit. So it will be again, squarely driven by the government, and but that has its limited, drive because they can do is more of an infra thing. And infra is again more mechanized. You have a less labor and more of a machines doing the infra and construction activity. So it's a normal cyclical economic slowdown of an economic cycle. After 2 3 years of good growth, you have a plateau of 6 months to 9 months. So that is where I see the consumption pocket, be it durables or FMCG or auto, they all will take a back seat. So one has to again focus back on to focus on. We are muted calendar year 25, at least the first half. Second half, the story will, we are forward looking, we will start building as per the monsoon progress in the other parameters which will pan out.
Very important points right there. Dharmesh ji, apart from this, let's first actually look at the markets, revisit the markets yet again. The markets have slipped below 24,400 now. So we'll just look at that. if you look at the kind of decline that's coming in, it's now 0.6%. So we are now at the low point after the first 15 minutes of the candle has shaped up. So it's not looking good because all the sectors are now down in the red. The ones that are extending pressure are the metal space, 1.8% lower. PSU banks now 1.2% lower. Small caps down by 1%, something that was actually soaring at record levels. This is something that we will discuss with Dharmesh ji as well. Now, financial services are declining. Everything is declining down in the up by 3.2% at 13.6 odd levels. Let's look at the key stocks there, which are the index contributors in this decline. Reliance Industries, 13.9 points, getting converted into declines for the Nifty from Reliance. HDFC Bank, 13 points towards the decline. Infosys, 13 points towards the decline. ICICI Bank, 10.4 points towards the decline. L&T, Tata Steel, Axis Bank. So you have the banks, you have the IT majors, and you also have heavyweight Reliance Industries that's actually contributing to the downside. What's still stemming the fall? Bharti Airtel, 3.6% higher. You have BPCL, Adani Group stocks, Adani Ports and Adani Enterprises, HUL, Aisha Motors, Britannia, Nestle. So FMCG is a complete, defensive space that we are really looking at right now. Dharmesh ji, let's discuss, why the strength within the large caps is not getting seen. Is it to do with the FIIs again? Selling spree in India. I mean, yesterday's numbers was again 3,500, 3,560 crore rupees odd. We had just started to see some pullback coming in and some flows coming back, but that did not sustain for too long. What is it that one should really understand?
Sakshi, I mean, yesterday it was a selling figure, but few days back the buying figures which were coming, it was more to do with the most of the block deals and many entry and exits were happening. So one is not very sure whether that was a pure buying into the correction which the market has taken place. The second factor is market is forward looking, and this year FY25 looks to be a washout. So next figure will come from the budget, and when the management committees start rolling in from the Q3, that is where I think FI's interest may come back, depending upon how corporates are seeing the market. I mean the industry and the economy shaping up. Till now, the interactions which we are having is not that great. So they are not very negative, but at the same time, that positive body language which they used to see. The third factor, which I think is more important as of now, is the rupee depreciation, which is happening faster. And this depreciation makes the income in the hands of FIA even lesser with all this taxation coming into play. And before the budget, there's always a fear that if that capital gains tax is again raised by 2.5%, from 2.5 to 15%, things can happen, and the taxation angle is wide open as of now. So various factors are playing out. They do take a backseat. So this selling is likely to be there from the FIs. What is still, stabilizing the market is a domestic flow. So we saw the SIPs and the mutual fund flows coming in, though it was a tad lower than the previous 100, but still it's quite healthy. And my only fear is this SIPs are getting invested into, small cap and mid cap space. So mid cap is still fine, but small cap, if there is a general slowdown in the economy for next 6 months, the earnings will falter further, and then it becomes a difficult situation to come out. So one has to be mindful of companies you are getting into at the current juncture.
Absolutely. One has to be extremely mindful of the companies that you're getting at this juncture. Let me again point out some stocks that you can keep on your radar, viewers. It's the OMC space that is relatively doing better. You have IOC, BPCL, both up into the green, HPCL as well, all the three of them up into the green. You have HAL from the defense pack within the PSU space that's holding up, but most of the pocket has actually slipped. You just have about a handful of stocks, 7, 8 stocks within the Nifty that are in the green. BPCL, Bharti Airtel, Adani Enterprises, Britannia, Nestle, HUL, and Adani Ports. So Adani stocks, you have FMCG stocks that are holding up right now. Within the FNO pack, you again have Colgate that's pulling up from the FMCG pack again, IOC pulling up, HPCL, Jubilant Foodworks that started to garner some pace, that Steel Authority, NMDC, Tata Steel, all of them down in trend. Apart from it, the railways that were in thick action are also seeing some profits being taken off, like IRFC in the F&O space today, that's down in the red. Let's get Dharmeshji to understand about the metals pack. We were hoping with the China stimulus getting announced, Dharmeshji, that this space could be probably something that investors can keep on their radar. But just a few days of a move and it's again dwindling. Is it just to do with the today's action, or do you think metals have a structural story that one should understand here?
Yes, Sakshi, I think metal do have a structural story to play on
Mm.
the positive side. And the strategy in this market is never chase the rally, let it happen, because finally
Yeah.
it is going to cool off. And if you're trading the market days like this, like the day like today, and that is the time when to buy these companies. So China, as far as China is concerned, what China has done till now, the first
Mm.
stimulus which they have announced was state government. They were lowering the debt of the state government. So nothing came in the hands of the corporates or the consumers at last. Now what they have announced is the intent of both monetary policy easing as well as the fiscal policy easing. And just an intent. What is the quantum of easing will come through? When it actually passes through, then the production and activity starts. And see, aluminium prices have cracked down significantly because most of the smelters in China is shut down because of the lower demand. So eventually, all these countries will pump up demand, and a lot depends on China as far as metals are concerned. But
Mm.
domestic theme is playing out. US is playing out fine. Europe is picking up. So to my mind, I think Hindalco, companies like that, looks very
Mm.
attractive at
Okay.
times of correction. So if you are getting it 3%, 4% lower, definitely as a trading play, you will keep on getting bounces. But if you are structural buyer for say next 6 months to 1 year, there's a serious money to be made in the metal space, and there I think companies like Hindalco, Hindustan Zinc, JSW Steel stands a very good fair chance.
Okay, got that. So that's the view that's coming in. Dharmesh ji, you did talk about PSU banks right at the start. I also wanted to get a sense on the large private sector banks as well. What is the position that investors must have here, keeping in mind that, of course, FII flows will be important to track in this space again. And at the same time, some of the
Yeah.
stocks have moved to record levels like HDFC Bank. Beyond this, will they have the continued strength to move up in 2025 too?
Actually, the problem here is you don't have, I mean, slightest elbow room as far as private sector banks are concerned. They are heavily owned by FIs, you have just now pointed out. And if you look at the it was 50% of the earnings growth, whatever 10-12% growth given. Out of that, 50% was the treasury income, which won't be there in Q3. So Q3 it will be back to normal, operating income of these private sector banks. And there, I think there will be a challenge when they report their earnings this time in Q3. So there will be slight slippage in the asset quality because the unsecured portion is still not come out of the house. So that problem would be there. At the same time, some skews in the net interest margin will be observed. So, to my mind, I mean, HDFC Bank and ICICI Bank can see a serious selling coming into play if they miss on the earnings. And by when I say they miss on the earnings, this time the PAT growth from the operating income should be at least 12 and 13%. Then only these banking stocks will see buying traction. Otherwise, they are already heated up. And that's the reason why precisely our, as a strategy, we shifted to, public sector banking space, and that too on the second companies, because there the margin of safety is quite high.
Okay. Quickly, I'll go back to the markets to tell you how the first 25 minutes are shaping up. The Nifty is down 0.6%. We've slipped below 24,400. And all the sectors are down in the red with the more declines coming in on metals now. It's slipped over 2%. PSU banks down by 1.3, 1.2% declines on the small caps. Mid caps also down by 0.9%. So the broader markets are also losing in trade. About 0.7% of decline on the banks. So the banks are also not providing any support. IT index itself is down by half odd percent as well. So all the sectors are still down under pressure. There are only several pockets like I have marked, but beyond the broader markets, let me just pull up some names. Probably this will interest all our viewers. DCM Limited is up by 16% as well. Apart from this, we are also looking at Padumji paper. Again, paper stocks is something that have been consistently showing us some moves on the positive side as well, viewers. Again, real estate, infra names, so Parsonar Developers is up by 5%. You have Noida Tool Bridge Company after a long haul, that's also up by about 5 odd percent right there. DCM Shriram Industries is also up again. It's a group related move, I believe. The Premier Explosive stock also about 4.5% higher. So that's as far as the broader market moves are concerned at this point in time. Just wanted to point out that, where in the weak market also there is a lot of strength being seen. Nothing of the sort of that you should be probably looking at, but just keep an eye out on where the momentum is right now. Let's get back to Dharmeshji to understand where else can one be really looking at in this current market setup. Dharmeshji, what I asked Mayuresh as well for 2025, your top 2 or 3 themes that you believe investors should definitely look at. Is there anything to be avoided also for 2025 as well?
Yes, again, between I missed your voice, but what I
Still.
understand is how the 2025 would be looking forward to, and what are the stocks or companies which are likely to do well.
Yes.
Yeah. So there, I think the best is the defense companies. I mean, they will rule 2025 because of the kind of order book they are sitting on, and HL remains the topic out there. So already 1,26,000 plus kind of an order book within the margin improving from 27, and management has guided 29-30 should be the operating margin. ROE is in excess of 31-32, and they're still you are getting it at FY, I mean 25x, 26x, FY26 earnings multiple. My mind, I mean, the target price which we are looking for HL is 6,000 plus for the next calendar year. So that remains the topic. And if you want to take a punt on a blue chip, Tata Motors stands a very good chance because overall corporate, restructuring has to happen. The CV segment and the PV segment will be, demerged from the Tata Motors, and the stock price has taken a heavy correction. And assuming that the US continues with its monetary stimulus, Europe is already used. So ECB cutting bank interest rate yesterday by 25 basis point, and China coming out with the monetary and fiscal policy measures. So these all are very big market for JLR. So that valuation comfort is already there, and if the traction picks up on the sales of JLR overseas, will have Tata Motors playing out in a great way. And our SOTP based valuation target for Tata Motors is around 1400. So these two are, I mean, stock company pick. Otherwise, the theme which is likely to play out is defense will play out, railway infra will play out, metals as a space will play out, and infrastructure like L&T, NCC, PNC infra and all. If you are you have done your homework well about the companies, I think that is one space which is likely to make money. One more sector which I'd like to highlight here is the technology part from engineering, research and development, not the software ones. I mean, Infosys, SCL Tech, these are the software plays which have already made highs. But if you are looking at R&D kind of a companies, there I think Tata Technologies, Tata Elxsi, KPIT Technologies are looking very strong. EV as a cycle is taking a 6 month to 9 month kind of a gestation period because of transition to the next level of automobile layout. So because of that, you are seeing this segment a bit slowing down, but it is likely to pick up soon. So that is one more theme which is likely to play out on the later half of calendar year 25 and FY26. Those are the basket which is likely to do well.
All right. Well, that's a brilliant note right there. I hope viewers, you have taken down everything that Dharmesh ji has pointed out, and we'll also promise is going to work well for all the investors in 2025. We'll thank you then, Dharmesh ji, for being with us on this special edition to share with us
I'm
such
unable to
wonderful
hear
insights.
Sakshi's voice, please.
Like you always do with all our viewers. Thank you so much for being with us. And viewers, now we will also welcome another special guest now. We have Kush Godasara, another market expert who's joining in. Hi, Kush. Good afternoon, good morning. And I hope that you've been also tracking the markets very, very closely. Friday the 13th is something that is already played out in the first half an hour of trade. I mean, all the sectors are down. We are now further losing ground, 0.7% of a decline coming in on the Nifty, and there's a smile on your face. Do you expect further declines coming in? Does it really point out to another series?
Very good morning for me actually, because I mean also for many viewers, if I mean, we are already intimated if we are not closing about 24,700, then gates are open for 22,000. I am sure still people call me Black Cobra in my friend circle. But that's what, I feel that 22,000 is on the card. I mean, if you look at the, RBI commentary, CRR cut was there, but they have projected GDP at a lower rate, inflation at a higher rate. So there is some issues in the market, definitely. And now you look at the stocks like Tata Motors, Reliance, they are not performing since last 3 months. I've been continuously saying this thing that, if blue chip companies are not doing good with the business, how will medium and small scale do? So that was a fundamental view. And technically, yes, definitely, if we still 24,000 is a good support. But if we break that, then please be ready for 22,000.
Okay, be ready for 22,000. That's what Kush believes. Kush, then any safe haven right there? Should one turn short sellers even on several pockets? What is it that you're advising? Any key stocks?
So as of now, to short sale, Hindalco, as you were discussing, I think metal stocks are ready for a fresh
Yeah.
plunge. Definitely also banking names like SBI and ICICI Bank. So they are good stocks to short. Maybe at current levels, I won't initiate any fresh shorts because already we have opened up a gap down. So maybe we'll wait for today's closing. It's too early to even say. I mean, I have been excitement. I have given targets for 22,000, but today's closing is definitely important. And if you are an investor, I mean, this would be the last fall before we start a 10 years rally. So if you are an investor, start raising your SIP amounts.
Okay, so that's a wonderful tip right there. If you are a long-term investor, raise your SIP amounts right there. Okay, any key pockets or themes that you believe long-term investors should pull up their SIPs in, Kush? We have a lot of our viewers who actually are interested in knowing about where exactly should they be starting up or stepping up their SIPs in this downturn to take the benefit of these lower prices as well. What have you personally identified?
So one of the, first we start with mutual fund, then Tata India Consumer Fund, where most FMCG stocks and all the day-to-day, things we use in our life like Maruti, MRF, all the stocks are there in that fund. So definitely, I would give a good weightage on Tata India Consumer Fund, where you should start your SIP. If you want to start investing directly into equity in the form of SIP, so for next 6 months, five sectors which I believe we should start investing as of now is FMCG, because we have already seen Tata Consumer and ITC, two FMCG stocks which I believe should perform well. So start investing there. Second is auto sector. So M&M and Tata Motors are my favorite pick. So in auto sector, that should be your picks for long-term investment. Third, power sector, because we all without power. I mean, everything daily we have to, now charge our even watches, our iPads, our laptops. So power is going to be the next 10 years multi-bagger. So Tata Power is my pick from power. Fourth is, of course, mobile data. Of course, right now also we are using data. Otherwise, this show won't be possible. So Bharti Airtel is my pick on the long term. And fifth, new age IT stocks, which I always Swiggy and Zomato, because I
Yeah.
mean the convenience which with they give us to consumer, they are not giving discounts, but they are giving conveniency. So definitely Swiggy and Zomato are my pick. So these are my 6 to 8 mix of pack, but not at a one go. Start investing every month.
Okay, that's a wonderful idea. So, key sectors and key stocks that you can start your SIPs in case you are a long-term investor and you want to take the benefit of lower prices right now. Thanks a lot, Kush, for getting us all of that update from the mutual fund space as well as on stocks too for the long-term investors. Markets further slipping lower. We now have 24,378 right now on the Nifty. The key declines are coming in again on metals, PSU banks, even the small caps are losing their ground now, 1.3% lower. I think this is what we should be discussing with Kush. Kush, we had started to see record highs after record highs on small caps over the last few days. And from yesterday onwards, again, this correction has started. After maybe 2 weeks or so, we are starting to see a correction back escalate further within the broader markets.
speculate further. Two key reasons are, if you look at last week's DIA data, I mean, they have, decreased the speed of investing. Rather, they were many times net sellers. Thirdly, if you look at mutual fund data, in November, we have seen the highest SIP stoppage ratio. So somehow I think, mid cap and small cap action from the fund side will be lower because of now even Q3 results will be upcoming, and we already know FMCG sector has already announced that this quarter is not going to be good. Auto sector is not going to be good. So auto ancillary, which are part of mid cap and small cap, will see some fresh selling. So definitely avoid if you are a short term trader. Don't be in a myth that this is a near term correction. We will see a good short term in small cap and mid cap at least for some time. I believe yesterday's correction on mid cap index and today's fall, if you look at the daily chart, as you rightly mentioned, almost after 8 sessions we have seen this profit booking. So I
Yeah.
believe 50,700 can be the support of mid cap index. So still 1,000 point correction on mid cap index can be witnessed.
Okay, got that. There is further pressure that's building up. Kush, before we let you go, any key stocks for today that you want investors to really look at, either on the long or the short side?
Definitely for the short side, Hindalco, I will give you the level 668 can be a stop loss on the future levels, short at
Okay.
current levels. On the downside, 630 is my target. Second stock, it's a little bit risky, but I think IT stocks will also now give a pause. So Tech Mahindra is on my radar, only for risky traders. Short Tech Mahindra future, 1800 can be a stop loss. On the downside, 1700 can be on cards for next week.
Okay, got that. Well, Kush, we will thank you then on that note for being with us in this morning edition to share with us both the long term as well as a short term view on the markets, the strategies, and the key stocks right there. It's always a pleasure to speak to you. And as you've highlighted, our current trend remains on the weaker side. We'll have to see if important levels are broken, whether 22,000 is coming back on the Nifty. We'll continue to touch base with you on that front. And for the long time investors, this could be the best time to increase your SIPs, just like how Kush has mentioned. So all of those important points is something that you should definitely keep on your radar, viewers. We'll start looking at the markets and wrapping up for the morning edition now. It's a weak setup, 24,374. We'll see whether there is any sign of any pickup coming in. Remember, already from the CPI as well as the IIP data, the positives are not getting reflected in the markets, not enthused with the kind of data points that are coming in. Or is it to do with the larger sell-off that you're seeing? Remember, the US was down, I had pointed out. Asia markets were also largely down in trade, and the muted trend was also getting indicated on the gift Nifty, and it's panned out like that. And it's seeing further weakening, especially from the large caps. There is no support. Reliance, HDFC Bank, Infosys, ICICI Bank, L&T, they're all declining in trade. Those pockets that were actually supporting the sentiments over the last few weeks, the metals, for instance, that's down by over 2%. Small caps and mid caps that were hovering higher and performing better than the benchmark, that's also slipped into the red. And several other pockets are also now declining, be it the IT, the bank space as well. Now, even the defensives like FMCG, that's also some of them are still up, but most of them are also declining. Stocks like sector specific moves like railways and defense was being seen. Even today, we have some amount of defense move that is coming in, but the rails have lost some kind and derailed from the kind of trend that we had been seeing. But is it just for today, at the end of the week, that we are seeing this trend, or will it continue for the next week as well? Well, for today, definitely, remember, as I had pointed out, for the Nifty to come back into a positive weekly move, 24,677 is what we need to close at. That seems to be a distant possibility, looking at the opening trends that are already slipping below 24,400. Will there be any kind of a move is something that we will continue to track for you throughout the course of today. So stay tuned with us. We'll get you enough number of market experts to share with you all their wealth and experience in terms of what do they expect for the markets for the year end, as well as for the 2025 New Year beginning 1st January as well. So stay tuned with us. There's a lot more coming up, which you must definitely track.
Criteria we want to set up for to be not standing as well. So in that situation, between not standing